Hi everyone, let's cover my Elliott Wave scenarios on Bitcoin, starting with the first scenario, which is a double zigzag to the downside, wave W, wave X, wave Y. After wave Y, we're then looking for price to move towards the upside and create a new all-time high. In this particular scenario, the move to the downside is counted as a wave ABC with a triangle in wave B, and the first structure in wave X is counted as a flat ABC. Now, because this flat over here finished before the vertical line on my chart, which is the 0.382 fib time taken from the start to the end of W to compare W in time with X in time, preferably wave X is going to be a larger sideways structure before then moving to the downside in wave Y. It is very uncommon for structures to finish before a 0.382 fib time compared to the first structure. So in this particular case, because price finally touched a support that we had down here between about 111 and 112K, a flat would be interesting, and then a wave A to the upside, a wave B, and look for a 5-wave move to the upside in a wave C. Alternatively, this can still be a WXY with then a zigzag ABC in a wave Y towards the upside, but at least seeing a bit of upwards momentum would be nice to finish wave X. You don't like price to move to the downside and touch the 1.618 that we have here at 109.2K, because that is a very uncommon target for a wave B. So preferably this is not touched, as it almost like pretty much invalidates a flat in then a wave ABC inside wave X, as well as a potential WXY. You don't like a wave X to really go that deep. Now, price, of course, made a high volume low. I mean, preferably it holds, but if it would take it again, then yeah, sure, we still have a little bit of support to the downside, which is the top of the gap, if I can find it. So here, the weekly gap low, actually, not the top, but the low at 110.590, which we just missed out on touching. But you don't like to lose it, because then you're going to pretty likely move to the 1.618, of course, which is not what we like to see. Now, wave X preferably does not move to the 0.7 in this particular scenario at 120.9K, as that will reduce the probabilities for a sharp double zigzag WXY. Now, after wave X, we're then looking for a wave Y to the downside. Estimation of the target would be between 105.8K and 102.9K. Now, the second scenario I'd like to show you is a variation. It's also a WXY, but this is a sideways WXY structure. So the beginning is exactly the same, and then inside wave X, you're actually looking for a similar structure where you have your first leg of wave X, you're looking to finish your second leg in X or potentially finished, and then you get your third leg, right? So that is in a flat structure. You look for a BC or a WX and then a wave Y to the upside, but preferably to create a sideways WXY, as I have drawn here on my chart, you do touch the 0.7 at 120.9K, as this reduces probabilities for the double zigzag that I have just shown, right? The sharp corrective structure increases the probabilities for a more sideways corrective structure. And then after your wave X, the probabilities are initially highest to look for a flat structure, ABC, in a wave Y. You then therefore create a sideways movement with wave W being a zigzag. Wave X can be any corrective structure, and because W is a zigzag, wave Y in a sideways WXY is not allowed to be a zigzag, but a flat is the next most likely option, which can therefore mean wave B can touch the 886 taken from the all-time high to the low of W, basically almost creating a fake out of the all-time high, baiting some potential breakout longs, then move it impulsively to the downside in a wave C to trigger the stop losses and the liquidations before then moving it back towards the upside. Now, the last scenario I like to show you is the most bearish scenario, but it's difficult to give it the highest probability. So here we would look for a multi-1-2 preferably. I mean, if you want to count this as a single impulse to the downside in a wave 1, 2, 3, 4, 5, because this quite clearly counts best as a flat structure. So preferably you would end a first structure than here, then you have overlap between the price action of 2 and the price action of 4, and then a 1, 2, 3, 4, and 5. An overlap between price action of 2 and 4 is far from preferred. It lowers the probabilities for an impulse because it's a strong guideline to not see overlap between 2 and 4. It's not a hard invalidation. You just don't like to see it, right? So therefore, you'd preferably move into the realm of multi 1-2s, where you then have your wave 1, your wave 2, your second 1, your second 2. You really like to see a wave 3 to the downside in this particular case, right? So that this wave 2 is not going to be a very long sideways structure compared to the higher degree wave 2 that you have here, right? Preferably your lower degree 2 is a little bit shorter in time and price, or equal in time and price compared to the higher degree 2. So preferably you would finish this over here and then get wave 3 down. The issue, however, for a wave 3 to the downside at the moment is that this local structure does not look too great as an impulsive move. So we have the highest volume move to the downside overnight, but price immediately retraced to the 0.618 Fibonacci, which means that counting this structure as a wave 4 is very low probabilities. If you would count this as another 1, 2, 1, 2, 3, 4, 5, 4, 5, your first wave 4 then hit the 0.618, not what you like to see, lowers the probabilities for an impulse. Now, if price would move towards the upside and creates another high above 113.7K, then it creates another high after this vertical line on my chart, which is the 6 fib time. And it is comparing this move to the downside with this range. Because if you are looking for maybe a multi 1-2, right? So an impulse doesn't really work. 1, 2, 1, 2, 3, 4, 5, 4, 5, because 4 touched the 618. Got to be aware of potentially then a multi 1-2 structure, right? So then you have your 1, 2, 1, 2. You look for another 1, 2, and then eventually down. But in this particular case, if price would move above 113.7K, then your wave 2 is over 6 times the size of your latest move down, which then has to be counted as a wave 1. And that significantly lowers probabilities for another 1, 2. I mean, if I would look at this structure, I would probably prefer to count this as some sort of a WX and then a wave Y to the downside, ending on a high amount of volume, or maybe like an A, a B, and a C to the downside compared to a multi 1-2. But in order to be more safe, it makes sense for price to take out 113.7K. And if it does, it increases the probabilities for price to get some more upwards movement. So it requires a little bit of patience. But this would be your most bearish scenario, and you just want price to move to the downside, touch the 1.618. That is not great for the bulls at 109.2K. And quite simply, the trade setup here eventually would be to wait for 1, 2, 1, 2. If you're not involved with shorts, you wait for wave 3, right? Or potentially add as price is moving down. Then you get a 4, 5, 4, 5. And once your 4, 5s end, you're looking for a reversal, which then creates an opportunity. So, yeah. And then we have the levels. So the horizontal levels here on my chart. This is everything I have at the moment. I removed the levels that were touched here with the wick, right? We had 2 point of controls here. So those have been touched. And you can see we have a little bit of an order block here at 114, then some horizontal levels, right? There's quite a lot going on. If I remove my, if I only keep my volume levels and I remove the horizontal levels and the order blocks, then these are the volume levels that I have on my chart. Of course, not having the weekly gap low there on my chart. So this is then what we have going on pretty much with regards to the volume levels. And those are my favorite levels. The volume levels that we had over here have been touched, therefore have been removed from my chart. Then we get to the news. We do have some news here Tuesday, Thursday, and Friday this week. Make sure you trade safe around these times. It's Central European time zone, right? 2:30, 2:30, 2:30 pretty much on all of the days. So trade safe. And then we get to the probabilities. Well, at the moment, when looking at the structure to the downside here, or especially this here, it does count better as a 3-wave compared to a 5-wave. In an impulse, we have overlap between 2, 4, not great. And for a multi 1-2, we need a 3 down. At the moment, it doesn't look too nice as a 3, but it preferably you move above 113.7K, which is what I also write here. So probabilities would be more on the side to continue a range in the wave X in the first and the second scenario shown in the video, with the bearish scenario multi 1-2 coming on the second spot, right, like lower probabilities, and then take out 113.7K here. would increase the probabilities for a bit further upwards movement. And then the area of interest to the upside with some nice resistance is definitely this pocket over here as a first area, which is like around 117, 118. So that being said, I hope that this video was helpful or valuable to you. On the left, you can see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.